Hi everyone, Donna here with Bookkeeping Made Simple. Today I'm going to talk about another current event that I'm sure is on everyone's mind that we've been, in my home, we've been watching pretty closely, and that is the run on Silicon Valley Bank and its collapse and what that means for you. Before I get started, as always, if you enjoy these videos, please like, share, and subscribe. That's really how I grow my channel. I mean, I spend some on advertising, but it's really not for the channel, it's for the bookkeeping service. So yeah, I really try to bring a lot of good quality content, which is challenging a lot of times. Apologize for I've been kind of quiet the last couple of weeks, and that is because tax season is in full swing. So I haven't had a ton of time to do the videos like I would like, but I did want to get one out today. As many of you know, Silicon Valley Bank, which their main clients are, how do I put this? They're really a venture capital type of a bank. So it's not as bad as when Washington Mutual collapsed, which is Washington Mutual, or WAMU, was the largest bank collapse. This is the second largest. There is a lot of questions that are kind of going around about this. There's a lot of questions that I have about it myself. Number one, the management team sold off their shares in February, and that tells me right away that they were possibly committing fraud, and knew that things were about to go badly south, so they divested themselves of their assets. The problem with that is they actually have a fiduciary responsibility to their depositors and their investors. So for them to turn around and unload their stock, knowing that the bank was about to go under, and they had to know, the timing is just all wrong. There's a lot of things that I can often tell is a problem because of timing, and this is one of them. So the timing was all wrong. The management team got rid of their stock about 2 weeks ago, which tells me that they probably knew that the collapse was imminent. So there's a concern, at least in my mind, there's a concern there. What really has happened is that Silicon Valley Bank, or SVB, really, their depositors and their customers were tech firms. And they made a bunch of investment decisions. Like I said, they're really kind of a venture capital bank. They're an investment bank. So yes, they were in high demand by tech firms. They chose to make a lot of investments. So just as a really quick primer, so to speak, on the banking system, banks don't keep their deposits locked up in a safe. They invest them. All banks do this. It's called fractional reserve banking, which means that they don't have all of the reserves on hand, especially not in cash, that you might think that they have. I mean, you'll think my money's in the bank. Well, no, it's really not. Your money, your bank has stewardship over that money. They're investing it to try to earn interest on that. They're able to do, it's called fractional reserves, so they only have to keep a fraction of the reserves that they have on hand, and the rest of it they can send out, and this is what the money that they use to make loans and make investments. And it's considered irresponsible of a bank not to be making loans and investments. So a lot of tech companies started using Silicon Valley Bank to hold the cash that they used for payroll and other business expenses. Many of their depositors had billions of dollars in there. And SVB took that money and they started investing in long-dated US government funds, including those backed by mortgages, right? This is starting to sound a little bit like 2008. They were safe as houses. But bonds have an inverse relationship with interest rates. Okay, so if interest rates go up, bond prices fall. So when, after the pandemic, as the Fed has been trying to rein in inflation, interest prices have been going up, bond prices have been falling, and the portfolio started to lose value. Now, I suspect this was unrealized losses. So they were still holding them, as far as I know. I don't know for sure. They were still holding the bonds, but the value was going down. And my suspicion is somebody somewhere panicked. And it has gone on kind of over since 2020, 21, 22, as things have just gone, interest rates have soared. So bond prices have dropped. Bonds are actually one of the safest investments you can have. So the customers started to run on the bank. And that means that they started going to the bank and withdrawing all their funds. Well, they don't have all the funds there ready to be withdrawn. So they had to start selling the bonds. Okay. So it started selling the bonds, which scares some of the customers, which means the customers started running and trying to get their money out. And it only, when you have a run on the bank like that, and that happens when customers start demanding to withdraw their money, it doesn't take long for a bank to have to collapse. So there were a number of investment decisions that SVB made that kind of caused this problem. But the real cause of the problem was someone got worried and started withdrawing all their money and told their friends who started withdrawing all their money, who told their friends who started withdrawing all their money. It only took about 48 hours for the bank to basically collapse. This morning, President Biden was on the news discussing what's going to happen next. And Biden said that the depositors would be made whole. Investors are kind of out of luck, which sounds fair to me. I'm hoping, I'm banking literally on the fact that this is not going to create a big, anything like the savings and loans collapse in the 80s or the subprime mortgage collapse in 08, which more people are probably familiar with. I was just a kid in the 80s, but I do remember the S&L crisis. We're hoping that doesn't happen, that they're able to contain this. So they are coming up with a way for the depositors at the bank to somehow be made whole. So if you had money in that bank, you should be able to access it this morning. My concern, though, is what's going to happen next, because if typically what happens, let's say one of my biggest clients that I really count on. Fortunately, my clients are pretty diverse, but let's say my biggest client that has most of my income involved with it collapses. And then I can't pay my bills, which means I can't pay my employees, which means they can't pay their bills, which means that, that starts to affect a lot of different people. And when you're a big bank like that, it's a lot of people, which means that Facebook is going to be having problems meeting payroll. Twitter may be having problems meeting payroll, or would have if the government hadn't stepped in. They are trying to see if central banks are going to have a problem, if the other banks that did business with SVB, because nobody does business in a vacuum. We are going to have to wait and see. So that's basically what happened. Like I said, that what really, really, truly happened is that a few depositors got scared, withdrew their money, and the only way to take care of that, the only way to resolve that was for the government to step in and say that depositors would get their money back. So That's and SVP did back startups and other companies that traditional banks tend to shy away from. So, and then if you look at kind of what's been happening in the tech sector, a lot of technology firms have been laying off. And I really think Elon Musk kind of started that when he fired so many people at Twitter and proved that he could run the company with a fraction of the employees they had. And more tech companies are starting to lay off. That doesn't mean that the entire economy, by the way, is going to collapse. It just means that the tech sector was bloated. So yeah, lots of things going on, a lot of moving pieces. That's all I'm going to say about it for right now. As this unravels, I'm going to be doing a few more quick videos on it so that my husband is very heavily into the stock market, and so he stays on top of this. I stay on top of this because I want to know for my accounting clients. So it's a big topic of conversation. But I also recognize, especially with Chris, he doesn't seem to speak English when it comes to investment stuff. So I wanted to talk about it a little bit, translate it into plain English so that if anyone listening can understand what's going on. Like I said, what triggered this again, they had a lot of money in bonds, government bonds, which usually is like the safest investment ever. But as interest rates went up, bond prices fell, and it only takes a few depositors to panic, start withdrawing their funds, and it's a run on the bank, which will lead to a bank collapse. I mean, there's just when you do fractional reserve banking, it leads to a bank collapse. So we're going to keep an eye on this. I'm going to try to come back and talk about this more on Thursday, and I will talk to you again soon.